So a lot of people are talking about the end of the dollar, and it's probably the trending topic on YouTube today. The dollarization is a really serious issue, and there's a lot of people worried about what exactly to do. Now, obviously, it will impact people living in the United States, but this is a titanic change, and it will also affect everyone around the world. And it's not going to be an easy transition. There's going to be a lot of pain, and anytime when the currency rises or falls, there's going to be lots of chaos. This means economic pain, such as unstable inflation, a ton of social issues, and rising geopolitical tensions. So, I want to give a framework about how to think of the dollarization and, more importantly, how to prepare for the inevitable. Now, first, I want to address time frames and how this process will take as long as it needs to. Just like how you can't time the markets, no one can time how long the dollar will lose reserve status. No one exactly knows. And on one extreme, you have people calling for the dollar to end within 5 years, and on the other, you have another group who believes it will last for another 100. And just like most things, I tend to believe that the answer lies somewhere in the middle, and it's more constructive to talk about the steps we can take to prepare in a meaningful way without losing ourselves to hysteria. And this means putting all your money to gold. It's just as crazy as going 100% into US government bonds, and we must have a more nuanced approach. So here's my worldview on surviving the dollarization. We must have some urgency, but there's really no need to panic. And let's start with defining what de-dollarization is, right? Some mystical term, because this term can mean so many things to different people. Now, what I like to do is to simply look at the word itself, de-dollarization, right? What does it actually mean? It simply means the act of moving away from the US dollar. This means fewer people and fewer countries using the dollar for global trade and to store as reserves. Now, this is nothing new. It has been going on for decades. The dollar as the reserve currency has slipped from 70% to under 60% over the last 23 years, and most recently it has dropped to a low of 58.4%. And this is a slow erosion which will likely continue. And let's address why this is so important, because the dollar is held across the world for global trade, and as a store of value, it creates an enormous demand for the currency, and this gives the US economy a tremendous advantage. And it's no surprise that over the last 40 years, the US stock market has outperformed the rest of the world. It has outperformed other major economies, including Germany, Japan, and China, and the returns are phenomenal. Just look at the chart. And this is a direct byproduct of having the world reserve currency. When everyone holds dollars, they mainly invest in two main places, right? Either they buy US treasuries or they invest in the US equity markets. And because of all this rush of money to the system, it lowers borrowing costs for American companies while pushing stock prices higher. So if the dollarization accelerates, which I believe it will, we will see the reverse effect. Growth might not be as robust as before. If confidence is lost in the dollar, confidence will also crumble in the US equity and bond markets because they are all connected. And this brings us to a very important point. How is confidence won and lost in the currency? And to make this simple, let me illustrate two scenarios, two challenges the US faces today: the banking crisis and the debt ceiling fight. And let's say the banking crisis today gets out of hand and the collapse happens. If the US government decides to print trillions of dollars to save the financial system, this will impact the currency 100%. The financial system might be safe for now, but the world could see this as a horrible mismanagement of the dollar, and this causes a loss of confidence. And let's use the debt ceiling as the second example. If the US decides to cut back on deficit spending and they rely less on raising new debt, this will show the world that America is becoming more financially responsible. That's a good thing. And this will increase confidence in the reserve currency. So, truth be told, it isn't China, it isn't Russia or BRICS that controls the fate of the dollar. It is the United States themselves. And the conversation around the dollarization always tends to veer to the extremes, doesn't it? Either the dollar will stand strong for 1,000 years, or it will be as good as toilet paper tomorrow. And I think that is a very dangerous approach to have, because we are just feeding into our fantasies of what we desire. We'll be ignoring reality, and this will make us overestimate or underestimate the consequences of the dollarization. And what I believe is going to happen within my lifetime is a shift towards a multipolar currency regime. And this is a situation where multiple reserve currencies will emerge, and it won't be a unipolar domination like the dollar, but there will be regional currencies that will take flight. And this include the Chinese yuan, the Indian rupee, and of course the euro. the dollar will become less relevant, but it won't be useless. It will be worth less, but not worthless. And this is a very important distinction that we must appreciate. And let's answer a very important question that might seem rather basic. What is the currency today? How does it function? Well, it's a medium of exchange that allows you to access the goods and services of people or nations that accept the currency. And because the dollar is the reserve currency, almost everything is priced in dollars, and that is what gives it value. So let this ruminate in your head for a bit because it's very important. As the dollarization proceeds, more transactions will be done outside of the dollar, but this doesn't mean the dollar's finished. You can still use it to access goods and services in America. Now, the US is still the world's second largest exporter of goods and services after China. And this is a very important point. This map shows the top export in every US state. And just in the West alone, we have gold from Nevada, aircraft from Arizona, beef from Colorado, and cars from California. This means the dollar will still have some value. It might have less purchasing power down the road, but it won't be instantly worthless. And once we accept this, we can have a more constructive conversation. We are talking about a shift away from the dollar and not the collapse of the dollar, and now things become much clearer, doesn't it? It's much simpler now to prepare for a power shift than the nightmare scenario where the reserve currency just bursts into flames. And when we talk about where to invest in a multipolar world, the knee-jerk reaction is to sell off all your dollar assets, isn't it? Get rid of all your US stocks and your treasury bonds, but we need to look at the system that is in place. The dollar system is a self-reinforcing system that entices capital to flow back into the US economy anytime there's a crisis. And let's say Saudi Arabia tomorrow, they start to price their oil in the yuan or their own domestic currency, the Saudi riyal. And we know this is bad news for the dollar, but let's dive a little deeper and work this out. Now, if dollars are no longer accepted for oil, this creates a shortage of dollars. This will spark another currency crisis that happened in 2022, where countries all had to scramble for the dollar. And what does this do? It created a feedback loop where the dollar strengthened and money flows back into US bonds and stocks. And this ironically will prop up the American markets in the short term. So completely pulling out of the US markets isn't a good idea as well. So here's a better approach that I take. A better approach is to focus on the companies themselves. Apple, for example, is an awesome company that I love. They create innovative products which I really enjoy. In fact, my videos are all produced on an iMac. And whether the dollar gets stronger or weaker, great companies will always outperform and give you a good return. So just treat the US markets as just another way to access companies that you believe in. So if you believe in Microsoft, Coca-Cola, or McDonald's, you think it's a good investment, go ahead and invest. You shouldn't be worried about the dollarization because many businesses today are international as well. Their revenue streams, they are just so diversified that even if the domestic demand in the US falls, international demand will pick up the slack. And personally, I still hold positions in US companies because I believe in their products, their management, and what they stand for. The strength of the dollar is just a minor factor, guys, when I access individual companies. So let's not completely discount the US markets because there's still a lot of value there as well. But let's talk about the long-term effects of the dollarization. And sooner or later, there will come a tipping point where the dollar loses enough influence to make an impact. It could be 5 or 10 years from now. It might be when the dollar falls below 40% share in the market and we won't know for sure, but it's coming. And this is where we need to look for stores of value outside of the dollar. And for many of us, this will be hard assets, and there's a whole spectrum that you can consider. I personally believe having some gold and silver is a good move, but buying into real estate is also a great way to have tangible wealth if you have done your homework. And because once the dollarization accelerates beyond a certain threshold, there's no turning back. And here's why. When countries start to rely less on dollars, they will naturally hold fewer in reserves, and this means the demand for US treasuries will start to come down and bond yields will start to spike. And this is a big problem if the US continues to keep deficit spending high. It's no longer a debt ceiling crisis, but a borrowing ceiling that has been hit. And in 2022, the US had to borrow over $1 trillion to run the country. And that is a huge sum of money, but what if they can't borrow anymore? What if no one else wants to lend them money? And when this happens, the buyer of last resort, the Federal Reserve, will have to step in. They will have to print money to buy up the excess bonds, and this will cause inflation to spike. There'll be more money in the system, but the supply of goods and services won't really increase. And we know the phrase, right? Too much money chasing too few goods, and it's going to happen. And to prepare for this, we have to think beyond currencies and stock market. And that's why this channel really champions hard assets. But the type of hard assets really depends on where you live and the opportunities you have. For example, in Singapore, the tax for buying a second home has just recently increased to 20%, and it's a brutal amount. And this means for $1 million apartment, I have to pay an additional 200 grand to get it. For foreigners, that has increased to 60% tax, so you'll be paying around $600,000 more for $1 million apartment, right? So good luck trying to buy a home in Singapore. That's why I prefer gold as my hard asset of choice because there's no sales tax on precious metals here as well. So the type of investment you want to make really depends on where you are located. No one can tell you a cookie cutter guy. No one can tell you 100% this is what you must do. You have to make your own decisions. And in the new world order, we'll have more than one reserve currency. This means many other economies will start to open up and grow. Just like how the dollar as the reserve currency helped the US economy boom, so will the rest of the emerging markets. And this is where we need to sit down and start looking at investing outside of the United States. There's a whole world of opportunities out there. There are the BRICS countries like India, China, and Brazil whose economies will start to take off. In fact, the BRICS nations are slated to overtake the G7 nations in terms of GDP, and in some measures have already exceeded them since 2020. So during this interval, when the dollar is still the reserve currency, it's important to take the time to explore and understand what else is out there. Learn more about the economies of China, India, and even Brazil. These are big economies in Asia and Latin America that will keep growing and growing. And realize what the dollarization means for emerging economies. As they move towards bilateral trade, they are less reliant on the dollar. They become more resilient. And that means fewer currency crises because countries don't need to chase the dollar for their imports anymore, or at least to a much lesser extent. They can simply pay with their local currency. And this is a very important point that we can't discount. Now, I'm not saying that the US will crash, but emerging economies could realistically overtake America when it comes to growth. And this becomes even more apparent if the BRICS nations decide to develop their own common currency. In fact, this will be the topic of discussion during the upcoming BRICS summit. And as long as the dollar remains the world reserve currency, emerging markets will lag behind because less money flows into their markets, and that has always been the case. But we are moving towards a multipolar world with multiple reserve currencies. Emerging markets will have a good chance of growing faster than the US economy. Last but not least, we have to prepare for a world of higher inflation. We know the inflation numbers doesn't reflect reality. April CPI report just came out and is at 4.9%. But if you shop around town or simply head to the supermarket, it feels more like 10%. And as the dollarization continues, we will see more supply shocks happening. The US won't just sit around and allow the dollar to lose reserve status without a fight. That's a reality. There'll be more sanctions flying around from both sides, which could really affect the supply of goods and services. We could be living in a world of perpetually high inflation, and that is a nightmare. Even in the US, I don't expect the Fed to bring inflation down to 2%. The real inflation numbers will likely be higher than that. The cost of living will continue to rise until everyday stuff will become quite unaffordable. Take this headline from CNN for example. The cost of food is down, but grocery bills are still up. And that's because inflation affects the entire value chain. When wages go up, when energy prices stay up, the price of commodities might go down, but the prices you pay are still elevated. And that's why my best investment isn't in the stock market, but it's buying bulk in the supermarket. And that is where I can get 10, 20, or even 30% guaranteed return. Every time I head to the supermarket, I buy groceries and toiletries like tomorrow's Armageddon, right? I'm basically following the Mark Cuban rule, and people think that I'm preparing for a nuclear event. And I kid you not, guys, 5 bottles of shampoo, 10 packs of shavers, and 10 tubes of toothpaste at one go. I buy them all at once because surviving the dollarization means surviving inflation in our day to day life as well. I can't guarantee gold will double or the stock market will rise forever, but I can get an instant return on my cash because prices are still going to rise, and that's almost 100% certainty. And it's time to think about diversification. When it comes to the end of the dollar, it won't be an easy process or transition. This will be painful not just for the US but for everyone else in the world. And if you're betting on one big event, where the dollar suddenly collapses, it likely won't happen. Because even if the US defaults tomorrow, the dollar system won't crumble instantly. And this is actually good news if you think about it. A slow unwinding means we have time to prepare and there isn't any need to panic. You don't want to put all your money to one specific scenario hoping for it to manifest. Now, what if the dollarization happens 10 years longer than you expect it to? You might be missing out on investment returns for 10 long years. So here's what I'm doing. I'm still invested in US equities, but I'm increasing my holdings of gold and emerging market stocks. And I'm going to watch what the US government does. If they keep printing money and they abuse the dollar's privilege, the more our power into precious metals and the emerging markets. And there's really no need to panic because all this shift will take years or even decades to play out. But the dollarization is inevitable, so you don't want to act as if it will never happen as well. So take the time and invest in your own education, learn more about the financial markets, understand the role of gold, explore the emerging markets, and do your own homework. Now, investing in the US might be fine for the next 10, 20, or even 30 years, but it won't be the best place forever. So guys, I hope this video helped you out and let me know what you think. How long do you think the dollarization will take? Will it be in a few years or a few decades? Let me know in the comments below. Stay safe. As always, be sure to smash the like button and subscribe as we navigate through this insane reality.